Folks are back up and running. Had a little bit of a technical problem there. Video card glitch. Need to get diagnosed. It all of a sudden, spontaneously, it will just stop sending signal to the monitors and it will not wake up. The only way to fix it is a hard reboot of the system, so we're back now. And kind of what we're dealing with right now is you've got a real bearish action on the NASDAQ futures. They're about to turn actually negative after having been positive, I think, all day. Dow Jones is down 225. The NASDAQ 100 is up 13. Composites up 3. S&P is down 11. Russell's down 9. All the futures are negative with the exception of the NASDAQ 100, which is almost there. I mean, it's been trading back and forth across zero for a little bit now. And this is very bearish price action right now. Looking for it to trade potentially down to about here, 67.54 level. Which is about 18-point drop. The selling action is occurring on higher volume. If you compare your red bars to your green bars, you'll see that the majority of the green bars are below the average. This is a 4-minute chart. Quite a few of the bearish volume bars are above. So a lot of these bearish price moves are occurring on above average volume for the day. So that's just one more clue to the puzzle. And now we're getting, a rebound here, which is mildly bullish. This is not a spot where I would put a stake in the ground. There's just too much that can go against you. Now that was unusual. We are seeing some higher bullish volume in the last part of the day, where you have 1, 2, 3 bars that are bullish bars that have traded above the average volume for the day, and this is on a 4-minute chart. But this is decidedly a bearish day. All 5 indices that we pay attention to, the Dow, the NASDAQ, the composite, the NASDAQ 100, the S&P, and the Russell are all down. Their corresponding futures are all down. Volatility is up, both the index and the futures. And about 240 was when this really started in earnest. Not really seeing anything here from a news standpoint. Other than this one, I don't know that this is necessarily what's moving the market, but basically an analyst at Morgan Stanley says that he sees several corrections by the end of 2018, or at least that those corrections happen. It would make sense. So if we're in a late cycle, which is what he's saying, late stages of a late cycle environment, if you pull up your business cycle, like what stocks is everyone going to rotate to, you would think that consumer staples would be the place, not now necessarily, but like would be the place to be coming up. But consumer staples today are they're actually the biggest laggard. Consumer staples down 2.25%. Next is telecom services. It looks like down 1.7. Then utilities. So those are defensive, 1.4. Now utilities, you'd expect to do well in a rising rate environment. So we're about to trade down to this level here. And now the question is this a bounce? I don't think it will be. This bar, if it closes above, which I think it will, trades up to here and then comes back down. So when I say I don't think it's a bounce, what I don't mean is I think it's not going to bounce off of here at all. Like it, short term, yes, but long term, at least the way the momentum and the stochastics are shaping up, is that this is going to want to try and push through and close below. And see, this picture has changed. This is the 1 hour. This used to be very bearish, or sorry, bullish. It's now very bearish. This is forming potentially a bearish stochastic crossover. And we're seeing that here in the 4 hour too. So sentiment has changed a lot. We are going to see this rebound because we're so oversold here. Whether or not the 4-minute follows suit, we'll see. Probably it will. So this is probably going to be a strong rally up to about here, which a rally up to here, more likely up to about here, because a rally up to about here is also a rally here. So this is the 243 moving average on a 4-minute chart. This is the 81 moving average on the 15-minute chart. So looking across time frames can be helpful, because especially when moving averages line up as areas of resistance or support, that gives a lot of information. Walmart is down almost 10%. So this is investors really sour on Walmart. Not happy about the earnings miss during the holiday quarter. Not happy about the margin squeeze. There's a squeeze on gross margins. Not happy about e-commerce sales coming in lighter than expected, because the Walmart story is Walmart as the Amazon killer, or at least being able to hold its own against Amazon. So right now it looks like we're getting our first chance at a short. We're seeing this here. I had intended to put that order in with a trailing stop immediately behind it, but that did not execute the way I planned, and so I took a bigger loss. So that's a tactical error. All right, just more bad timing on my part. Not efficient. Right now, what I think the futures, at least the NASDAQ, is telegraphing is that short term and probably going into the close, it's more of a long play than a short play. So the danger here is this is where you're getting your bullish sentiment from. this is tempering it. This approaching overbought. And that was a successful play to the long side only because I got out before this turned negative here. If I had held on, would it not have been as profitable? And so right now what we're getting is this move to the downside, which, if this completes, can make this look very different. That's what makes this so hard to predict sometimes, or project. And now we're about 3 minutes away from the most volatile time of the day, which is the last 15 minutes of trade. Last 15 minutes of trade in the cash markets. The futures will trade for another 15 minutes after that before they take a 15-minute break. So the schedule is the cash markets close at 4 o'clock Eastern. The futures trade till 4:15, take a 15-minute break, resume trading at 4:30, and stop at 5 o'clock. Take an hour break, and then they resume at 6 p.m. Eastern for the next day's session. The Dow is now down over 1%. So the Dow is getting hardest hit today. By index, the consumer staples they're down just about 2.3% now. Telecom is 1.9, utility is 1.45. Technology is actually up 6 basis points in the sectors, in the S&P sectors, for now anyway. So that was a good little trade. Except I made that tactical error which I've cautioned against in the past, which is when you forget about leaving part of a bracket trade on the table and it fills. What I mean by a bracket trade is that if your broker allows you to do this, and most do, especially if you're trading futures, when you initiate your opening order, you can structure it so that right behind it, it places a limit order for your profit target and a stop order for your stop loss. So I had opened a position with a bracket order like that, and I had the stop loss. It was a sell order, and the stop and the profit target were still open, but I saw it move down suddenly, and in order to preserve my profits, I went ahead and put in a pincher order. So I set my limit, and then I had a four tick stop behind it, which got me out, preserved the profit, but those two sides of the bracket were still open. So now those are, because I'm no longer in an open position, those are now orders to open, whether it trades down and it's a buy when it hits a limit, or if it trades up and hits the stop, which is a buy stop in that case, which is what it did. It hit that buy stop, canceled my profit limit, so now I was long the contract. Which if I'd held on would have been okay, because look at the way it's moving right now. But I didn't want to take that chance. You don't want to make a decision like that when you're pressured for time. Best thing to do when something like that happens, it's unexpected, is just flatten the order and get out. Don't panic. So with 11 minutes left to go, and this being the most volatile time of the day, me sitting on what I think is a respectable profit for the NASDAQ for my futures trades today, an overall profit for the day which is above my goal for the day. I'm not going to. I'm inclined not to take any more risk. Even though this is looking real good. Looking real good right now, but I've got resistance across these moving averages, not just on a 4-minute chart, but on a 15-minute chart too. Just got to clear this hurdle. I've got declining stochastics on the tick chart, and a 1-minute chart that, quite honestly, I don't know which way it's going to go. I do know that I've got this as lift here. But right now I think I'd rather just watch. And you can see this slowing down in the face of, basically headwinds presented by these moving averages. The reason why these are important is that, other traders, if they use moving averages, not everybody does, but there's enough traders using moving averages that, and if they're not using the same ones you are, but, this is a 9, this is a 27, this is an 81, this is a 243. They might have a 10 period. They might have a 20 period. Somebody might have like a 90 or a 100, and somebody else might have a 200. They're close enough. Like those are the 4 major ones you see. 10. A lot of times you'll see 20, 50, 100, 200. You might see 10, 50, 100, 200. It's just all of those are important. And obviously you can't plot every conceivable moving average on your chart, which makes it impossible to read. But having those major ones will serve you well for the vast majority of your situations that you find yourself in, I think. And I had this thought earlier that I was going to share. There's a lot of trading systems out there, and I'm not a fan of paying for trading systems or buying a trading system, and I'm not saying that they're bad. Some of them are. That's not my reason for saying that. My reason for saying that, though, is that, you know, whoever's system that is, you know, he or she developed it for the way that they trade, and maybe they think that they developed it for not only the way that they trade, but the way they think that a lot of other people trade. I don't know that they necessarily think that way. I think, you know, they probably think if you can adapt your trading style to this system that I have, you'll be successful. My belief, because I've tried trading with systems I didn't come up with on my own with little success, my belief is that, or the approach I take is, I'd rather show you different tools that you have access to and how they work, when they don't work, get you familiar enough with those tools that you can then formulate your own system. Because if you're trading a system that you formulate and your discipline is sticking with that system, I think you'll be vastly more successful than anybody who buys any trading system out there. Because you developed it, it works for you. And as long as, like I said, if you have the discipline to stick with it, and you can master your emotions, you can master the fear and greed, then I think you'll be vastly more successful. You know, all of the different tools that are out there, all of the different indicators, the different types of moving averages, the different drawing tools and chart patterns and all of that, they all work to an extent. Nothing works 100% of the time. There is no single market killer indicator that's going to make you money 100% of the time. More often than not, it's 2 or 3 indicators where you've got a couple of them are your primary, and there's another one that acts as your confirming. Or you might have indicators that you use when you want to get into a trade, when you want to open a trade, and then you have other indicators that you use to tell you that it's time to exit. This seems to be giving us some clues. You know, this bullish price action did peter out when it ran into these moving averages. It's now looking like some deterioration. Stochastics appear to be confirming that. The tick in the 1 minute, the 4 minute to an extent. So these are, oh, and I did completely miss. So the market, the final bell rang 2 minutes ago. I don't have the bell on. So this is now, you know, the last price action. This is the last 15 minutes of the futures trading, not for the day, for the session. They take that 15-minute break. They'll trade for another, you know, 13 minutes and take a break for 15 minutes, and then they'll resume at 4:30 and go till 5 Eastern time. But so the final numbers, at least what it looks like, is these numbers settle out. You know, the Dow's down 257, call it. The NASDAQ 100 up 9. The NASDAQ Composite up, or down rather, 5. So technology led by the largest companies. So I will bet you if you pull up your Amazons, your Googles, your Netflix, which Netflix was basically flat, your Facebook, although Facebook was down, your, what else? Apple was actually down. Nvidia. So some of your bigger names, not all of them, but you know, technology led by kind of your biggest names, your larger caps. Yield on the 10-year currently 2.893. Volatility up 6%. Volatility on the Russell up 11%. So heightened volatility on the small caps. Dow futures down over 300. NASDAQ 100 futures down 6 points. Mini S&P down 22. Mini Russell down 16. Dollar up, call it 70 basis points. Gold down just about almost 2%. Crude up barely, you know, still above 60. It's a 61.60. As might be expected, all of the currency futures, which are dollar denominated, are all down. Gold down, platinum down, copper down. Soft commodities, this is interesting. This is not something I paid attention to. We're up in the morning. So corn futures, wheat futures, soybeans are up. The other softs are down. That was not something I was expecting to see. Nat gas is just about the only commodity besides crude which is up. Of course, it got hammered last week, so it's probably recovering somewhat. So really, what was up today? Crude, nat gas, volatility, soybeans, the dollar, treasury yields. Everything else down. So that's going to do it for me. Hope you enjoy your afternoon and your evening. And we'll get ready to do this all again tomorrow morning. It's a shortened week, so it feels like a Monday, but today's actually a Tuesday. Tomorrow will be a Wednesday. I'm trying to remember the API numbers. I think still come out today, but I think that the EIA numbers will get pushed back to Thursday, which is what they usually do on a week where there's a Monday holiday. And actually, no, API does get pushed back to tomorrow afternoon. So that would have been at 2:30 today. It's actually going to be at 2:30 tomorrow. And then the EIA numbers will be out in the morning at 10:30 Eastern time. So those are the crude inventory numbers. Yep, EIA at 10:30 Eastern. So just keep all that in mind. Have a great night, everyone.